Hello, and welcome back. Good to see you. Do you remember the last time that you were riding on an airplane? Just imagine with me for a second that you're on the world's best flight and you're going through takeoff and the travel and landing all without any turbulence or events happening whatsoever. You just get to sit back, relax, and enjoy the flight. And now if you back that up and think about that from the crew's perspective of the airline assistants and the pilots that are flying the plane, that's kind of what apartment syndication is, if you think about it. So the crew is the general partnership team that is executing the deal, and the passengers are your limited partners or your investors. And if you think further along those lines about what the crew has to go through to have a super smooth takeoff, a great flight, and a great landing, we find that there's a lot of similarities between that of a general partner for an apartment complex. You may be wondering, what are all the things that a general partner has to do in an apartment syndication? That's going to be what we dive into today. Hi, my name is Tommy Brandt. I'm with TB Capital Group, where we invest in commercial real estate assets with a primary focus on apartments. And today, we're going to talk about the 3 phases that a general partner is responsible for navigating in an apartment investment. Let's jump in. Before we get too far into this, I just want to level set on a couple things, and that is a general partner is going to be responsible for different things depending on the asset class, the business plan, the vintage, the market, deal structure, and we're going to relate that today to apartment investing with an opportunity to add value. And all of these phases are centered around the topic of acquisitions, which brings us to the first phase that a general partner is responsible for navigating is the pre-contract phase. And this really is the step 0 part of being a general partner. The first step being is to identify your target market. So you are combing through a lot of potential markets that you have alignment with. And out of those markets, you are evaluating all these target markets based off of your growth targets or job diversity targets or new employment targets. And you're selecting 1, maybe 2 potential target markets. After that, then you're assembling team members of boots on the ground and property managers, different vendors for that market or those 2 markets specifically. And as you're building your team within that market, you are finding people that satisfy the different roles and responsibilities needed in order to execute. After you've got your market and team identified, now it's to identify the types of deal structures that you want, whether that's a 50-50 split, or a 70-30 split, 80-20 split, preferred return or not preferred return. You got to set that deal criteria. And then you're creating a partnership structure to align your general partners with the limited partners on that deal. After you've got your structure in place, it's now time to find the investors that align with this partnership structure. Remember, your investors are funding the down payment for the loan. They're funding the CapEx, business plan, the OpEx, any reserves that you want to take into this opportunity. And if you're bolstering your acquisitions pipeline, then you may be doing some additional strategies that are generating off-market leads for your acquisition funnel. And after you've got your acquisitions funnel churning out leads for you, then it's just a matter of underwriting them and pursuing the ones that meet your deal criteria. You're submitting LOIs, you're negotiating PSAs, which will inevitably lead you to our second phase that a general partner is responsible for. And this is your contract to close phase. So at this point in time, you have a signed purchase and sale agreement by both parties, the buyer and the seller. And it's time to roll up your sleeves and get to work. It's time to do diligence. So by now you would have already appointed a property manager. You need to be coordinating with them, and inspection day is a big day to line up because you want to walk the property with your broker, with your property manager, with your roofing inspector, plumbing inspector, building inspector. If you're doing a PCA report, which is property condition assessment report, then they need to be on there as well. You need to be walking as many units as possible that you can on that day. If everything passes inspection, then it is on to making an investment summary for your investors. This investment summary is something that you provide whenever you do announce the deal formally to your investors. In order to give an opportunity for all the investors to ask questions and come together and review the deal, you need to be hosting an investment webinar or a conference call at the very least. You, as a general partner, an opportunity to walk through all the fine details about the deal, why you love it, what is really intriguing about the deal, but also it gives the opportunity for potential investors to ask the questions that are burning and on top of their minds. And for those that are unable to make the conference call or the webinar, then you need to make sure to be able to send out those recordings so that people can watch this at their leisure. Before accepting any funds, you really need to have all the entities already in place. So that's where you're creating your entity structure for holding the property, for managing the property. You got your operating agreement, but also your PPM, which is your private placement memorandum. This is what your investors are going to need to review and sign if they want to join you on the deal. After all the paperwork is sorted out, then comes the transfer of funds. And that would go into the operating bank accounts held by the newly created LLCs and entities that were created for this project. And as far as the debt piece goes, it is the general partner's responsibility to secure the best debt out there. While the price is pretty fixed, the terms are very negotiable depending on the loan size, as well as your banking relationship and their appetite for this market. So after you've got the down payment from the investors and you've got your loan figured out, then comes closing day. Close on your deal, and it is a big day. And the last thing you do here is you celebrate because, oh my gosh, that's a lot to line up in a short time period. But it is not over. And as much as you want to celebrate all the hard work, it is really just time to get started working. And even though the general partner has accomplished an incredible feat in order to herd all the cats and accomplish this, work is really just starting, because now you're in the third phase that a general partner is responsible for, and that is post close. And this is a lot of work because this is the longest time period and is really just all things asset management. So this is a 5 to 7 year period where a general partner is responsible for a number of things. And so after the general partnership closes on the opportunity, then they should be creating some sort of guide or at least a handout that says this is what you can expect from us in terms of cadence around monthly communications, financial reporting, K-1 tax documents, and where to go if questions. And within that message, you should definitely do a formal announcement that you have closed. And there's a lot to celebrate there. And so after you've created your investor guide, now it's time to start fulfilling that. The general partner will be sending periodic property updates, financial updates, and then tax documents. Just to give you an example on some projects that we've done, we do monthly communications. And then on a quarterly basis, we'll do financial reporting. And on an annual basis, will be the K-1 tax documents. All the while, the general partner is responsible for fielding any questions that the limited partners have, whether that's around the market or the investment opportunity. They really should be an open book. The general partnership team is overseeing the property management company, and that is a critical partner to have, because not only are we trying to manage a property to its highest occupancy possible, but we are executing a value add business plan. And there's a lot of moving parts in that and a lot of relationships to manage. And so we propose having weekly calls with your property management company, and you can choose to also have an internal one just amongst the team in order to get organized for these weekly calls. And eventually things will get stabilized to the point where you don't need to have them that often. So say after 24 months, you've executed your value add business plan, you can maybe consider moving back to 2 times a month or 1 time a month if things are looking really good. And on the topic of a business plan, you need to ensure that you are progressing on your business plan, whether that's exterior CapEx projects, maybe you're putting in a playground or a swimming pool or a dog park, or on the interior side of things, you may be doing interior renovations, and you need to be tracking which units you've done renovations in and how many are left, and how long are they taking, and how long should they be taking. And in order to make sure that your rent is consistent with market, you need to frequently be analyzing the competition and seeing where the rents are in your neighborhood or your submarket or your 1-3-5 mile radius. And also, if reminding the exit plan associated with an apartment offering, you need to be frequently analyzing the market to sell for sales comparables in order to see what would an asset of my vintage and year built and tenant class sell for, and how close is that to the strike price that I need in order to generate X investor returns. And when it does come time to sell the asset, that is definitely the responsibility of the general partnership team. They are there to oversee the sale of the asset, which is very complex and sophisticated, and there's a lot of documents and regulations that feed that. And lastly, it is the general partnership's responsibility to administrate distributions, whether they're periodic or at the end. The distributions need to be accurate and correct. And then after you sell your asset, congratulations, you've gone full cycle. The last thing to do is to celebrate. And that is 3 phases that a general partner is responsible for in an apartment investment. Like I mentioned before, this is not an all-inclusive list, but it is the majority of things that a general partner should be doing. They should be operating on behalf of the passive investors. They should be operating urgently, and they should be an open book and have transparent communications. And if it sounds like a lot of work, that's because it is. You know, being a general partner is not for everyone. There's a lot that they have to worry about in these types of scenarios, and they have to drop everything to address any situations that arise. But I enjoy it, and to each their own. So we'll close it out there. I hope that there was something in there that was valuable. If there was, be sure to like and comment on the video and subscribe if you haven't already. It really helps out the channel a lot. And if you know someone in your network that this video would add value to, then you have my permission to share this video with them. Thank you again for stopping by. Have an amazing day. I'll see you on the next one.